morning, everyone, and welcome to yet another special edition of Business World Live or Business World Insights, rather. I have to say that this is one of the most anticipated, the most widely attended series, and of course, it's all about the stock market and what's going to be happening. So stay tuned. This is Danny Laurel, your host and moderator for today's session. Now, although some investors are still cautious given all of the uncertainties brought about by the COVID-19 pandemic, experts do believe that the majority of them are increasing their investments in the coming months and are optimistic about the reopening of the economy and just a general feeling that the worst is hopefully over. Now, whether growth drivers or potential risks, what else should investors watch out for when it comes to prospects of the country's stock market in 2022? That and more will be answered by our stock market experts joining us today in this discussion themed Philippine Stock Market Prospects in 2022. Now, ladies and gentlemen, we will be hearing from our speakers one by one before moving on to a free flowing discussion. We will be taking questions from you guys, so take your notes, jot them down, and send them in through the comment section. Do not miss out on this chance. It's not very often that we have these three people all in one room in a condensed format, so do take that chance and we will try our very best to answer them during that portion. Now, without further ado, let's jump right in. Kicking off today's panel of experts is the first Vice President, Corporate Strategy and Chief Investor Relations Officer of Call Financial, Ms. April Lee Tan. She's also the company's Chief Equity Strategist, writing and presenting market strategy reports and appearing in local business programs as a resource person for stock market matters. Previously, she headed Call's research team, which covers more than 60% of the PSE's market capitalization. Welcome and glad to have you with us, Ms. April. Go ahead with your opening remarks. Hi, April. May I ask you to unmute your mic, please?
Okay, sorry about that. Good morning, Danny. And good morning to all the attendees of today's webinar. And I'm glad to share with you my thoughts about the market. So, I think a lot of people are still cautious about investing in the market. And I don't blame these people because it's easier to be cautious rather than to be optimistic or bullish nowadays. First of all, we have the COVID-19 pandemic. Then, of course, we have the elections that is being raised as was one of the key concerns for this year. And then, of course, there's this threat of high inflation, especially in the US. And, of course, the rising interest rates from the Fed. So those are all the concerns that people are talking about this 2022. That's why they are a bit cautious. But let me just tell you what is the risk of being too cautious at this point. First of all, as far as COVID-19 is concerned, I think there are some indications that developed countries are living with it, learning to live with it, and even the Filipinos here in the Philippines are learning to live with it. First of all, because our vaccination rates are already picking up and are very high. In fact, we're already vaccinating children at this point. And then, of course, medicine is already becoming widely available and affordable, such as molnupiravir and Paxlovid. So, in fact, even with the surge that we saw in January, the government did not have to lock down. And for this March, we might, the restrictions might be eased further and we might go to level one. And if you look at the economic indicators, the economy responds very favorably from relaxed COVID-19 restrictions. As far as the elections are concerned, you know, the first thing that I'd like to say is that it's not yet a foregone conclusion about who will win because in all past elections, I think it's a widely known fact that the early front runners did not necessarily win the elections. And secondly, as far as the stock market is concerned, we did a study of how the markets performed 3 months before the election and 3 months, 6 months after. And surprisingly, the market did well 3 months prior to the election and also after. So if you stay on the sidelines waiting for what will happen after, you might miss out on quite a bit. Next, as far as inflation is concerned, yes, we know that U.S. inflation, for example, for the month of January, reached a four-decade high, and it is concerning. However, there are indications that inflation is peaking because, first of all, the supply side inflation could be addressed with more economies reopening. Secondly, as far as demand driven inflation in the US is concerned, yes, the US is doing better than we are. However, one of the issues that we're seeing is first consumer confidence is already turning negative, very weak. So that said, it's hard to imagine how these Americans will continue to be spending so much on goods. Secondly, we're looking at the ISM Purchasing Managers Index, and those indicators are showing signs of peaking and rolling over already. So, as far as the demand-driven inflation is concerned, we think there could be some resolution already, and most likely inflation will already peak this year. And then, of course, finally, the rate hikes by the Fed. Well, while it is a bit concerning, we also took a look at how markets performed in light of the higher Fed rates. And although there is a knee jerk reaction where the markets initially dropped because of concerns of a Fed rate hike, they still managed to go up over the long term. So, um, we are not too worried about that, especially since we're in the early part of the rate hike cycle. Most likely, the Fed is only targeting a normalization rather than a tightening to address bubbles. And finally, did you even notice that the PSEI is actually outperforming other markets? For example, the S&P 500 right now is already in correction territory, whereas the PSEI index is still up for the year-to-date period. And we just like to highlight the reason for the outperformance is because, of course, the economy is recovering. Valuations of our stock are very cheap. And finally, the foreign investors are very underweight and very light in the Philippines. So that said, I don't think there is much to sell. So, given all of those reasons, yes, we know that it is very worrisome right now. There are a lot of concerns. But that said, I think if we weigh the reasons why we should be positive and the reasons why we should be negative, in general, we think we should be more positive than negative on the stock market.
Great, thank you, April. That's a very good mentality to be keeping, especially as we try and look for opportunities right now. Very, very interesting insights. We will be delving into that more later in the Q&A. Let's move on first to the research head of SB Equities. Now, previously he served as DTI Assistant Secretary, Economist Strategist of Security Bank, and Assistant Professor of Economics at the De La Salle University, consultant of international agencies such as the ADB, ASEAN, WTO, and researcher at the Asian Institute of Management and Clemente Asia. Everyone, let's please welcome on screen Mr. Angelo Taninco.
Good morning, Danny. Thank you for having me. Good morning, everyone. Let me share my views on the Philippine stock market. As you all know, the Philippine stock market underperformed last year as it ended flat, whereas other countries in the region, Asia Pacific, have performed positively. And most of the sectors also last year were experienced a mixed performance. The likes of property and holdings underperformed last year, and we of course understood the some of the potential reasons for that. One, you have of course still the pandemic and the management of the resurgence of cases in terms of ensuring uh, health and also trying to balance the economy. So we had intermittent surges and also lockdowns last year, and but despite that, the economy of the Philippines performed beyond expectations. Our GDP growth last year was 5.6%, a notch above the government's target range, and also topping the forecast of analysts. And this was on the back of a strong second half performance in the third and the fourth quarter of last year. Inflation was elevated last year because of food prices, specifically meat, because of the pandemic in that industry, the African swine fever, and also you have disturbances in weather conditions. The most recent one would be Typhoon Odette, and that also has dampened the sentiment of market participants. But entering 2022, we were, of course, optimistic as we look at the outlook for this year. And we, of course, have a better forecast compared to last year's flattish performance. And but of course, the start of the year, we encountered the steepest surge in the pandemic, the Omicron, and that has dampened the mobility. That, of course, coming from record high movement of people and goods in the fourth quarter, thanks to our recovery from the previous variant, the Delta. And then February, as we are able to ease with the mobility in light of a sharp decline in our case count in COVID, we again encountered another potential shock, and this is on the geopolitical front. So overall, we think that there is still some upside to the Philippine stock market, and that we think this will be on the back of further economic reopening that will improve further the mobility and that will help raise confidence levels, which have been constrained since the time that the pandemic was introduced. But thanks to more vaccination and the coverage of vaccinated people, and also as the pandemic appears to be waning globally, we think that this could help boost the market sentiment and also the corporate performance. But then again, given our positive outlook to the local stock market, we think that there are still headwinds. And as mentioned, you have still inflation risk as one. And then another is now the geopolitical risk, which is a potential game changer if that is not contained. So, because that has potential repercussions on certain markets, like in commodity space, and we know that the Philippines is heavily reliant on commodity imports, particularly oil, and that would have a bearing on the corporate's input costs and eventually profit margins. But despite that, we are still cautiously optimistic on the near term prospects of the Philippine stock market. And given that we are now digesting more these risks on top of what we have already penciled in 2 months ago when we are looking at the 2022 outlook, such as the rate hike path of the Fed and also of other central banks in the world, including the Philippines. So this year, stock markets still has good prospects, but is facing headwinds such as inflation, geopolitical, and also the economic policy adjustments, in particular the monetary tightening adjustment that the Fed and also other central banks are conducting right now in order to combat inflation. Thank you very much.
Thank you so much, Angelo. I think there are recurring themes, no, that will be discussed later on, particularly the inflation story, the Fed hike. You both have mentioned it. For April, she did mention that the risks might be tilted to the downside. Yours might be tilted to the upside. So a lot of discussions on that. But before we get into that, let's move on to our third panelist. Completing our panel today is John Michael Lapina, the Chief Marketing Officer and co-founder of Investa. He has been trading for a living for 8 years now and does advisory, specifically cryptocurrency and NFTs investments in Monaco to ultra high net worth individuals. Welcome, Mr. Lapina.
Thank you, Danny. I forgot to mute. So, yeah, so I'll basically keep it short, given that Ma'am April and Sir Angelo already gave you a brief, basically a brief overview of what happened in the past year for the stock market. I think the expected reopening of the economy is gonna be bullish for the market, but given that, I think we should not be overly optimistic and still be cautious. Given there's a lot of volatility or there's a lot of factors that can affect the market. One of which is the upcoming elections. Next one would be the potential invasion of Ukraine by the Russian government, and of course the virus is still there. And though I think for a fact that the virus would not be staying for long. But yeah, given the current conditions of the market and the current conditions of the economy globally, not just in the Philippines, we should still be cautious in terms of investment. But there's still a good sign given that um, the prices of the stocks are really low right now, and the valuation of the companies are in a good shape. And I think one of the biggest factors that we can see in the market today is the shift in terms of the amount of investment flowed um, from institutions and the retail sector. I think one day, maybe the next 1 to 2 years, the retail sector would overtake the amount of investments brought in by the foreign institutions, or basically by institutions itself. So there are a lot of potential growth opportunities I see in the market. Though most of the stocks I think would remain sideways and would still be in consolidation phase. I think there are three main sectors that we have to look at. Number one would be the renewable energy sector. Next one would be technology, and lastly, which I think would be the black horse for the year 2022, is the mining sector, because I think for the next administration to actually get or to actually move forward, they would need funds. And one of the best ways to create those funds or to get those funds is to utilize our mining sector, which has been lagging for the past several years right now. If you look at nickel, for example, the stock, um, and compare it to the performance of the biggest, one of the biggest nickel mining company in the world, which is Vale, it's really underperforming. And I think if we do it right, if we check all the regulations, or if we manage to get past through the problems with the environment caused by the nickel mining or by the mining sector in general, we would be able, or the next administration would be able to utilize that. And I think there's a really big opportunity for that, for investors like us. So yeah, I think that's most that's what I thought, or that's what I think for the most part. And later I will answer questions asked by the audience also. Thank you. Thank you, Dan.
Thank you so much, JM. Very interesting there. Cautiously optimistic. Still be cautious. A lot of discussions there later on. All right. So may I call back our panelists on screen for the panel discussion? Of course, we have April, JM, and Angela. I just want to tell the audience here, I'm very excited to have you guys. I know the three of you quite well professionally, and it's great how you all have different kinds of roles. No, for April, I know you're very fundamental when it comes to the stock market. You study the financials talaga of the companies, and then you have Angela, who's really, for me, an economist at heart. That's also looking at the markets, and then for JM, a trader. So this playbook is very different for all three of you. So I'll be throwing in some questions, but please feel free to jump in, chime in, raise your hand if you wish, if you want to share as well and add into that. So this is going to be, let's not make it super scripted. I think, no one knows, no one has a crystal ball. What the audience wants to know are different opinions and different ways to understand what they themselves are looking at in terms of their investments. All right, so I wanted to kick off with a look back on 2021, and I'll kick off with April because I wanted to understand, in your opinion, what were the key factors that contributed to the movements in 2021? To what extent was this volatility sentiment driven, fundamentally driven, global growth driven. What, now that we're out of it and we're looking back at that year, and we still, we're at the thick of earnings season, so hindi pa lahat lumalabas. But so far, based on the earnings that you've seen for full year results, and based on how you're linking that to 2021, what can you say about how we fared, and how that colors your optimism, if I should say?
Yeah, if you look at 2021, the stock market was actually very volatile. It underperformed other markets, and if you tell me, just explain it in one sentence, I'll just say it's because of the underperformance of the Philippine economy. And the Philippine economy underperformed because, first of all, we're very consumer driven, and secondly, we had several surges, and we've been quite conservative in our response by locking down in response to these surges. So because of that, the Philippine economy underperformed. Therefore, the market also did not do very well. But that said, I mean, there were some pockets of opportunities. For example, we saw um, for example, the REITs performed very well. It's a new asset class, and because yields were very low in the banks, we did see quite a bit of demand for these REITs, and it was very exciting. And then, of course, we saw some stocks perform very well, those that were kind of pandemic proof and still delivered good earnings. You had the likes of, say, your ASEN, which still grew rapidly, Converge, and all the others still performing well. So the general market was weak, but there were pockets of opportunities, and
Mhm.
it was of course because of the economy lagging behind the global economy.
Okay, Angelo, can you add to that, no? Because what you said was the economy performed beyond expectations in 2021. So how can you reconcile that to the performance as well of the stock market? Can you say that, actually, considering all the lockdowns, and considering the fact that, we had closures, we couldn't have the same amount of travelers coming in, that we still performed better than expected, at least in the third and fourth quarters?
Yes. As you know, the our sentiment last year, 2021, was dampened by the resurgence of cases and the intermittent lockdowns. But the lockdowns that were imposed, especially in the second half or in the fourth quarter, was not as severe versus 2020. The GDP contracted by nearly 10% in 2020, and that, I think, was really an underperformance of the economy at the onset of the pandemic, as the lockdown strategy was still relatively nascent. And learning from that, in 2021, we are able to calibrate better in terms of having a more granular quarantine approach, and that has led the third and the fourth quarter GDP growth to surpass of analyst forecasts, even our forecasts. So the 5.6% GDP growth last year was not just above government's expectation, but at the same time fared relatively well in the region. I think we were better in most ASEAN peers in terms of the GDP growth. And moving in 2022, the outlook, we are looking at 6.5%. I believe the market also has the same outlook, and that tends to be, of course, relatively better versus the growth on the ASEAN region and globally. As you know, the IMF last January downgraded their global GDP growth forecast this year, largely in part because of a negative sentiment or forecast on US, as the Fed is gonna raise rates more aggressively. Plus, you have the quantitative tightening in the U.S., which is still posing uncertainty to market participants because of there's still no details on that. At the same time, You also have rising oil prices that are hurting oil importing countries like China, which is also struggling in terms of meeting its high GDP growth path. That's why they are looking at only a stable growth forecast for this year. So you have, on one hand, the Philippine economy uh, looking better this year versus
Okay.
last year, and also compared to the rest of the world.
All right. Thanks, Ajay. We'll get back to the outlook this year, but I just wanted to pull JM back in. Same question on 2021. No, despite the fact that according to April, it was a volatile year. There were, of course, all of these lockdowns. It was tied fundamentally. What we did see was record fundraising, diba? Activities. Like you mentioned, retail investor participation at a record. Was it a trader's market? When you look at how the bourse performed when it comes to the active traders, the day traders, the retail investors, can you say that it was an exciting time to be in the market in 2021?
Yeah, definitely. Danny, I'm trading the New York Stock Exchange as well and other markets. And given that, I can say that it's not just the economy, it's not just the fundamentals of the companies on our market, or basically the listed companies in the market. It's more of the question of volume. So right now, there's a lot of retail traders actually trading the market, and I think though that's good, I think there's something that we need to be cautious of, and that thing would be the volatility because traders doesn't really look forward in the future. What they want to do is to trade now, probably close the trade a week after. So for us, or for the not just for us but for the country to really grow the exchange, to really grow the market, we need to put in more volume coming from foreign institutions, the fundies. So we need to make it more attractive to them for us to have a really stable growth. And though it's volatile, I think the liquidity factor adds a bit to that volatility factor. Because if someone, like for example, someone with a big fund decided to sell during tomorrow, for example, the market would really go down if he wants, or if they want to sell a huge amount of shares. So I think for 2021, most of the stocks are sideways, but there are leaders such as the IPOs, the SPNEC, um, and then other IPOs that happen. And because of that, I think really the problem would be the liquidity part, or the liquidity factor, because instead of giving advantage to the main exchange, IPOs I think would just suck out the liquidity out of other companies. So we really
Okay.
need to grow that up. Yeah.
Very interesting, no? April, can you add to that? How can you reconcile the fact, especially let's move on na to this year. Has the investment or market not performance, market characteristics really changed because of last year? Now it's all retail. It's a lot of IPOs coming online. Will there be much more movement in specific types of stocks, smaller cap compared to the big guns? Or are you seeing the cyclicals back on track, the ones that underperform, the ones I think Angelo mentioned, holding companies, those big guys, the blue chips, diba? Properties, or is it going to be the different areas that are more exciting now?
Yeah, I think first of all, we like I kind of talked about the economy recovering. So it's kind of like a reopening play since we're learning to live with the virus, and of course the traditional economies who were hit the most by the pandemic would this time be the key beneficiaries. For example, SM Prime came out with their 2021 earnings, and of course the focus is on the fourth quarter, what happened when the government reopened. Then you see a substantial pickup in profitability, and that's what we expect to happen this year. And of course, coming from a very low base, and of course cheap valuations, that's where the market is focused on. Aside from that, of course, the banks, they would benefit, like even with the rising interest rate environment, as funding costs remain low. But then you have stronger demand for loans, and then of course they are able to reprice the loans at a higher rate, and they'll do well. So, and then of course, threat of NPLs going down. So there is a greater focus on these reopenings. And then on the other hand, last year we did see a lot of high flyers, like renewable energy, etc., which this year are not doing as well as they did because, of course, in a rising interest rate environment, the um, more expensive stocks are becoming less attractive because people have other, I would say, places to go. And then, of course, the foreign investors, which last year kind of ignored the Philippines because we underperformed. Uh, it's a matter of coming from a low base. Therefore, this year we will outperform the other countries that have reopened last year. Okay, so that said, we're seeing more foreign funds actually coming into emerging markets such as the Philippines, which are still cheap and have underperformed last year because we were relatively a laggard in terms of the economic recovery.
Okay, so catch up plays for you, April, no? Sorry, Angelo, before I go to you, I want to pull out JM because you mentioned in your opening statement sectors to watch are tech, mining, diba? And these are still, in my opinion, linked to COVID issues, diba? The mining sector reopened because we needed more money to fund the pandemic, but also there's a lot of push for that. You've also got the tech plays. Why do you think that April said that maybe we might be seeing the money shift towards the reopening place? Why do you think that these pandemic stocks will continue to be in the limelight in 2022?
Yeah, for the past years, I think Philippines has been a laggard in terms of technology. We haven't listed much technology stocks at the moment, and I think for the mining part, I think the Russian invasion as well is actually
Mm.
part of it. Currently, if you know, Russia is 7% of the nickel mined globally are coming from Russia. So because of that, I think the mining sector would be the centerpiece of the economies this coming years. And also, if ever a new administration decided um, to get funding, the best the best ways to get that is through mining, and other that would be the gaming sector. Yeah, so I think that would be the
JM,
main
what about
priority of it.
renewable energy? Because April said, that really surged already. You could see the likes of ASEN, but then you still have the C rate. Today it was already jumping. Yesterday was the listing, and then you have solar, PH. I mean, or those glory days, let's say, already fully valued from 2021, or do they still have a lot of room to run?
I think personally there's a lot of room to run, given that the energy sector has a lot of benefits or potential benefits to not just the companies but also to the investors. So right now, a research studied by the U.S. government said that when you invest in the energy sector, the return could possibly be 5 to 8 times of your investment. So that said, I think Philippines is one of the hottest place, given that we're a tropical country, right? So I think it's one of the hottest place to actually invest. If you are a foreign company who wants to invest in renewables, Philippines would be one of the countries to go to, given that we're not that prone to any calamities, except of course for the typhoons, and yeah. So that's what I thought.
Okay, thanks. Angelo, can you add to that? You said last year was flattish in terms of performance, and you said that properties holdings underperformed. We might be seeing a pickup this year, especially as the economy begins to recover. But what for you is cheap? How can you define that? How can you say those are still underperforming? To what extent are you expecting this rebound? Is it going to be pre-pandemic levels already? And how can you what's your expectations for a stock market recovery?
Yes, the of course underperformance would be based on uh, compared to say last year how far you went down in terms of the stock price relative to your peers, and also in terms of the economic environment, since last year, there was still, constricted mobility because of the resurges in cases and the intermittent lockdowns. So that's why expect market expectations were down, but when the economic growth data came out, surprisingly on the upside, then you are now having this optimism that we are experiencing at the start of the year, except for, of course, the Omicron surge. But as we had that end, the Omicron surge is now gone. We are again on the reopening play. So we are revisiting, of course, sectors and stocks that have underperformed last year, but we think tend to mimic that of the economic performance. So a reopening play would tend to help support those cyclical stocks that tend to follow the economic growth trajectory. So, given that we think there are, of course, I agree with the panelists that there are sectors and stocks that have underperformed last year that are now doing better. So you look at property and also holdings, and there are still certain sectors that have performed relatively well and are still performing okay, like financials, but in the context of an adjustment on the interest rate environment.
Okay, thank you for that. Let's move on to a very, very hot topic, the national elections. We're 3 months away from May 2022. I'll kick off with April. You already mentioned the 3 months before, the 3 months after. The stock market was doing well, at least historically. I also covered the midterm elections. No? And what we saw was that when we started reporting that the admin had the majority play, the market jumped, and analysts that we interviewed were saying stability was key. Can we say the same here, April? And can you give us different scenarios that you guys are looking at in terms of the results?
You know, it's still difficult to say at this point. Um, how the markets will respond, like whoever will win. Um, because we don't know yet who will be assigned. Okay, let's just talk about President Duterte when he was first elected. Of course, we didn't know what he was gonna do, but then after he announced his 10-point economic agenda, and then the people that he assigned, like Secretary Dominguez, etc., who were acceptable to the economists and fund managers, the market responded well, actually. In fact, if you review 2016, the first 6 months weren't very well because remember, during that time, President Duterte was talking about the contractualization, that he will
Mm-hmm.
make it legal. And then a lot of companies, of course, practice
Pull back. Uh-oh.
contractualization, So then the market went down. So it's quite difficult at this point. We still have to see how things will pan out. But that's it.
Mm-hmm.
I mean, I think we should give whoever the winning candidate will be the benefit of the doubt because, if the economy improves, of course, it will benefit them as well.
Mm-hmm. Angelo, can you add to that? Are market watchers closely looking at the platforms of certain candidates and how aligned they are with the administration and how they will be continuing specific projects that would be beneficial to different sectors, for instance, especially when it comes to policies, mining, pogos, these sort of things that we've been looking at during the pandemic.
Definitely, no, I agree with April. The thing about this transition on the leadership of government is that uh, at this stage we still do not know the details on the economic agenda of the next administration. Maybe safe to assume for some that there would be continuity from the previous administration when it comes to fiscal programs like infrastructure spending, in terms of monetary policy, say accommodative monetary policy, uh, etc. No? But we no, there's that's another source of uncertainty to me, the economic agenda. Since we are now in this stage of uh, adjustments in economic policy, monetary tightening, fiscal consolidation, and pandemic recovery.
Mhm.
So, to what extent, uh, since we have used fiscal spending heavily as our pandemic response, in terms of the fiscal metrics as well as the external buffers. So, to what extent will the next administration manage these, which I think would be a more challenging situation? And plus, you still have the certain problems like high inflation, and now you have the geopolitical
Mhm.
uncertainty as well.
Okay, JM, can you add to what they've already mentioned? What are traders looking at? What are the retail traders betting on?
Well,
Are they
currently
putting their money there?
the chart of the index is currently toppish. I think it's nearing the resistance already, and there's only a limited upside when it comes to the for traders. I mean,
Okay.
given that, I think it would take time before we break, or if ever we break out to new highs. It would still take time. So other factor would be the continuity. I think any administration or any candidate replacing President Duterte would actually continue what he is doing, given the fact that they don't have really much time to create another or to change that, um, because they need to prioritize the pandemic relief program or the pandemic related activities by the government. So yeah, I think it would take much more time before they can actually introduce new policies in the Philippines.
Sorry, April, I wanted to pull you back lang because you mentioned something very interesting to me kanina. And you said that, historically, the front runner might not even be the winner or the main person at the end, di ba? If that does happen, which could happen, how would the markets react, just in case?
Okay, so I mean, I think it's an open secret that the market likes Lenny Robredo. And, I mean, it is understandable in the sense that she is very, she comes from the right background. Therefore, most likely the policies would be very predictable. That's why the market likes her. But then again, that said, assuming that it is BBM who will win, um, I don't think that immediately investors will be so negative. I think it depends on what his economic policies will be. If they are still going to be, uh, you know, market friendly and friendly for corporate earnings, then I think that's what investors are focused on anyway. If it's still okay, then the market can still go up.
Very interesting. Angelo, JM, do you want to add to that? To those comments? On maybe favorite bets or of the market makers?
Well, to me, normally, in this case where you have the front runner with a wide margin, it may seem statistically improbable for the front runners to be surpassed by who's next in line. So, given that, it seems there's now increasing expectation of the front runners to head the next administration. And I think, as I mentioned earlier, what they are waiting for would be the concrete economic policies that will be conducted in light of the more challenging economic and geopolitical environment that we are currently facing.
Thank you. JM, one question lang on the mining, because you said that's going to be the dark horse, and that's exciting for many people, maybe not environmentalists, but for some investors, it's quite exciting. Tell us, will these bets change depending on the results of the elections? Do you see some contenders or presidentiables more in favor of reopening the mining sector and those that are not?
Well, to be honest, I think there's only kumbaga, there's two fast ways in order for them to get funding. and that would be the mining sector and the gaming sector. So if ever BBM won the election, I think the narrative would be not just the mining, but also the renewable energy sector, because that's what they're trying to bring in the public minds, right? They want to have cheap energy, they want to provide this one, and basically that's what they want to portray to people, that the legacy of his father, and especially in Ilocos, what they want to do is to make it as sustainable as possible. So I think those three main sectors are the ones to be responsible for the next, if ever, BBM won the election.
Okay, thank you for that. Let's move on to risks on the table, which you guys have already pointed out. The inflation, geopolitical risk, even the energy issues, scarcity, no? April, is COVID still going to be a key risk? Is it still a topic of discussion? We were talking offhand na parang in other countries, nobody even reports about COVID anymore. There are big events, there are concerts. In the US, for instance, they're really concerned about inflation. They're concerned about the Fed. It's much less about lockdowns and anything. So in the Philippines, is this still going to be the biggest risk, really? Or are we going to be moving on to other geopolitical issues, for example?
Well, it is a risk in the sense that, of course, we don't know how the government will respond if ever there will be a lockdown. And it's quite obvious if you look at the fourth quarter GDP when the government relaxed the quarantine restrictions. We did see the economy reopening. But that said, you know, um, you can observe that the government is being more open in the sense that, of course, as it relaxes the restrictions, for example, they're finally allowing children to go out, and it's not as strict anymore. Maybe because the population has a certain level of immunity given the higher levels of vaccinations, and more people having been infected already. So severe cases are not as much. So that said, I think, you know, maybe in the back of people's heads, they're still thinking that, yeah, maybe we'll have another surge and maybe the government will lock down again. But, uh, you know, let's adopt a more wait and see attitude. But because, for example, the third quarter, as Angelo had mentioned, it was better than expected because, I mean, that came to us as a surprise to us in the sense that there was a lockdown happening, but the economy still performed well. It could be that people are learning to live with the virus and life goes on. They still do what they need to do, and businesses do what they need to do to survive and still grow their profits. So it is a risk, but I would say less of a risk compared to last year.
Okay, thank you. Angelo, how can you define healthy inflation in the Philippines, diba? Because we also want naman some demand-driven pull. We also want to see, people going out and spending, and replacing the supply side issues, diba? How can you, what indicators are you looking at to say na parang it's no longer the supply side issue causing the prices to go up, but it's actually a reopening of the economy. Are we there yet?
One indicator is core inflation. So if you strip out the volatile items in the consumption basket, like food and energy, that of course are influenced by supply side disruptions like weather or geopolitical in the case of oil. Core inflation is a good barometer for demand pull, and if the demand for of consumers increased in light of economic reopening and with employment still growing, then that is a healthy sign of inflation. But however, the central bank is it's committed to ensure price stability, and it will adjust in terms of tightening monetary policy or raising rates if it sees demand pull inflation on the rise. Say if it breaches the upper bound 4% of the government's target range. And having said that, then it's still a healthy sign because inflation is still being curbed, although it's rising. It's still being curbed given the monetary policy tools as the economic growth is accelerating. In contrast, if you continue to have supply or cost push inflation, that to me is not a good sign because it erodes profit margin as input costs heighten. It also hurts the purchasing power of consumers. In fact, the US is feeling it right now. You see consumer confidence in the US down because their purchasing power is down. Consumer inflation expectations in the US have increased. So inflation there is entrenched, and that's why the Fed is forced to act. And we know that the elections in the US is near in November, so they really have to act strongly in order to show to their constituents that they are fighting inflation in order to preserve the consumer's purchasing power.
Okay, Angela, I'll follow up on that. No, it's no secret that the Fed will be hiking rates, but the question is how aggressive, right? Will it be 25? Will it be 50? And what are you expecting? What are markets pricing in? And if there are any surprises, how big of an impact will we be feeling that in the local bourse?
Yeah, so I think the market is pricing in seven rate hikes, so one rate hike per meeting of the FOMC until the end of the year. It's about pricing in a 50 basis point hike in March. To what extent the Philippine stock market will be affected, well, it remains to be seen. But my initial impression is that this could have a knee jerk negative reaction on our risk assets, stocks, and also bonds, as the Fed it will show that they are committed to have a more frequent rate hike path. So in the US, that's priced in, but there's still volatility, potential volatility in the sense that the market is still blind when it comes to the other side of monetary tightening, which is the the balance sheet reduction. As we know, the Fed has expanded its balance sheet close to $9 trillion already with purchases of government securities. No? And that has to be reversed in order to also contain inflation. So we do not know yet to what extent, how much will the balance sheet reduction be. That is uncertain. And if it's a surprise to the market, then it could have another bout of volatility, which could reverberate across the emerging markets as well.
JM, you mentioned the need for foreign funds to come in and support the market so that we're not sapping liquidity every time there's an IPO, diba, from each other. To what extent is this dependent on the Banco Central keeping in step with the Fed? I mean, the governor has said we will be reversing at one point, diba? But when will that happen? What are you expecting here? And how would the Fed aggressively raising, I say 50 basis points. I didn't, others are saying 25, diba? 50 basis points now is what's being priced in. How would that affect the movement of funds towards our own domestic bourse?
Well, we're hoping, especially the fact that the current situation of the U.S. stock market is actually at the top as well, and I think more and more funds should come in developing countries such as the Philippines, Vietnam, Thailand, and another would be the foreign ownership bill that's coming in the probably in the next few years, and I think they would need to actually expedite the process in order for them to get more funds in the foreign side. Aside from that, we should need there's a need also to add more or to list more companies in the market, given the fact that currently we're a bit lagging in terms of not just the volume, not just the liquidity, but also the number of stocks, number of companies listed in the market. Like right now, I think Vietnam is around um, 800 to 1,000 stocks, if not 2,000. So yeah, I think we
Okay.
should be competitive to the um, developing countries arena.
JM, last question before we take the audience questions. No, you were the one that mentioned the Russia-Ukraine issue and the energy impact of that. Not just oil, but even commodities. But they jumped in the past couple of days because of this issue. How big of a boogeyman is this going to be in 2022?
Well, that's very problematic given that for example, Germany's really well not dependent on Russia, but they're currently building a pipeline wherein they will get energy because in the past years they decided to most environmentalists in Germany decided to stay away from destructive energy sources, and now they're trying to build a pipeline that would give them access to energy coming from Russia.
Mm.
So it's really problematic in terms of how they would react, especially the way US and UK react to these problems is, of course, they don't want war, but they really can't do something big about it, given that for this time, I think Russia has the upper hand, and they would eventually ask other nations, especially the NATO countries, to give in to their demands. So this is just the start of, I think, the. Well, I don't think they will bomb Ukraine right now, but I think this is just the start for them to haggle and to get their demands right across the board.
Okay, April, I'll take na some audience questions because they're quite related to this. I'll take this one. Curious as to how the tension between the Ukraine and Russia and other ASEAN countries right now will impact the Philippine stock market. And harder question, what strategy can you advise us on shifting the activities in the stock market?
Yeah. Okay. So, I mean, I think we've seen the impact. I mean, you can't deny that it will cause some volatility in the stock market because, of course, the uncertainty, the impact on other markets. As they say, if the U.S. Sneezes, everybody catches a cold. So, obviously that's what's gonna happen. But I think I've mentioned it before when we did our market outlook, and in my other venues where I talk about it. We feel that this is actually a buy on dip market. Therefore, if the market gets sold off because of what happens in Ukraine, we should actually not be fearful and still buy the market. An interesting thing is, um, I saw a study where they took a look at what happened during other times when there were geopolitical risks, like other wars like the Gulf Wars, etc. And you did see the market go down, but after going down, it went up after. No, parang it's more like a knee-jerk reaction, and then as people learn to live with the problems, then okay, it's not as bad as we initially thought it would be. Therefore, okay, the market still goes up.
Okay, thank you for that. So, hopefully we domestically might be insulated again after initial shocks there. Angela, I have a question here from Basit A. Lakay. I think I'll know this. Does 2022 favor stock pickers or indexers?
Okay, so I'll also try to relate that to the previous question on the geopolitical tension. So, given there are lots of headwinds right now, so you have geopolitics, which I agree with JM is really problematic. Although I also agree with April that the past wars really it's more knee-jerk reaction. But that I think the difference now is the protagonists are two nuclear superpowers. So, and it is the structural reasons for this. It's really uh, goes a long, long way. So we could see lingering headline risk from the geopolitical side. But this is also on top of, as I mentioned, monetary policy adjustment, rate hikes, and quantitative tightening. In the US, in other central banks, we are seeing like Korea, Australia, in emerging markets, also in Latin America, and also Eastern Europe. And also, you are still dealing with domestic problems of high inflation because of oil, and food inflation, which accounts for nearly half of the headline inflation, has not gone away yet because we still have the African swine fever, we still have supply chain disruptions. So to me, I agree on the buy the dip strategy, because our economic growth is still strong. There is good prospects for a better economic growth path. As we said, we think 6.5% GDP growth this year could be reasonable, but the downside risk is also rising. So while we are having a economic reopening play, even in the stock market, so we favor cyclicals, we favor banks, and we also favor to some extent property, and then well, of course, financials, telecom. I think you also need to look at certain uh, defensives, no? That could, in a way, the pandemic is still there. Uh, as the WHO has said, it's not we could still have more variants to come. We were not able to predict all previous variants, the Delta, the Omicron. So at this stage, we also do not know what could be another variant and if it's more severe or more transmissible. So it's still a downside risk. So I think a so-called barbell strategy where you have a mix of cyclicals and defensives could be a good thing to do, especially at this period where you have geopolitics, inflation, economic, and also the election, the political uh, side, all going to affect market sentiment and performance later on.
Thank you for that. JM, can you answer the same question? Stock pickers or indexers? And also, just to add, will this year be as exciting for traders? Will it be a trader play as well as compared to 2021? Or will it be back to, fundamentals, back to the blue chips?
Well, I think given the volatility around us and the uncertainty happening around us, I think um, I myself personally is in mostly in cash position, but I'm still deploying funds to stocks that I think that are leaders. So not the index stocks, but most are actually short term plays that I see potential with. So given that, I think it would be a trader's playground given the volatility, and I don't want to take away, or I don't went into full cash position given the fact that I could have missed opportunity if my feet is not in the market. So for a trader to actually get that opportunity to enter at the lows, especially because I believe in this basically a quote that money can be made in a bull market, but wealth is actually made in a bear market. So if ever we have the chance or that opportunity of a lifetime to get at super low levels of the market, then that's better for us, right? So yeah, that's what I'm.
Interesting. Wait lang. April, bull market ba or bear, at what point are you going to say, okay, this is going to be the start of a bull run? And also maybe link this to an audience question, which sectors or stocks will likely ride the spending boost provided by the national elections? And how about after elections? Meron pa bang spending boost issue that might be happening here?
Yeah, okay. So as far as bull market is concerned, I think we are at the point where we are transitioning away from the bear market to a bull market. We haven't really seen it yet. Okay, I'm not a technician, but when you talk to the technicians, they'll tell you, "Oh, we're not exactly there yet, but we are headed that way." I don't know what indicators they look at, but uh, definitely we're headed that way. So the second question has to do with the election spending. Well, traditionally, consumer stocks should benefit the most. And we actually did a study, consumer and media. But theoretically, yeah, consumer companies should benefit the most. But if you look at the consumer stocks, it's not a 100% correlation. And this round of elections, what we're actually seeing is media companies doing well, like GMA7, but consumer stocks are not doing well. In fact, they have even underperformed the index and the properties and banking stocks. And I think the reason for it this time is that it's not only elections that are affecting consumer companies. There's also this high commodity prices affecting these consumer companies, and I think there is a greater concern that their margins will be squeezed. That's why they have lagged behind the other sectors. So just because a particular sector will benefit doesn't mean that it will perform well, because there are so many moving parts and it will also be affected by other factors.
Okay, April, I'll just jump in. There's another question here, but I think Angelo also mentioned this already in terms of diversification of portfolio. What about the hardest hit sectors? Travel, tourism. You're seeing revenge travel happening in Europe already, and airline stocks are really recovering. Are we going to be seeing that anytime soon here?
Yeah, I think in fact they are already recovering right now, which to me is somewhat surprising in the sense that I mean, think about the airlines and the oil prices. So who's going to be affected the most? And not to mention, the peso has not been a very strong peso. We actually had a weak peso. So you have a weak peso, and then of course, rising oil price. Yes, you do have revenge travel, but then that said, what about the international routes? They're still not flying all the international routes, and the international routes are not yet that full. So you don't have that scale. Then, of course, with oil prices up there, I don't think they have the pricing power to fully pass on everything. So, but that said, of course, the travel stocks are already performing quite well, maybe because they are coming from a super low base. They're trading at very cheap valuations. That's why, people are focused more on, well, at least, the worst is over. So that's why you're still going up regardless.
Okay, thanks for that. And Angelo, one last question here. Where do we currently reside in terms of economic cycle? Trough? Sana hindi na. Recovery? Growth? And what's your expectation if we're still in recovery, when we're going to get into growth?
I think we're in an economic recovery phase, unlike the US, where it appears they're on a moderation phase. I also think the stock market is on a recovery phase because it was flat last year, and then it's year to date. It's now doing well, outperforming its peers in the region. So, given the current situation, we are on good. We are on track to continue with the recovery phase. But as mentioned, we have to be cognizant of the risks. And I think this year the risks are really not just multiple, but relatively high in terms of its degree. But nevertheless, the fundamentals show we are on a recovery in both the economy and on the stock market.
All right, so economy on the mend. Thank you, audience, and thank you, panelists, for answering and for all those insights. Great discussion. We are running out of time, but to close this, what I wanted to ask for your final speech or closing remarks is to answer this question: what should investors know and consider about stocks in 2022? Maybe you have advice, maybe you have stock tips, maybe you have sector preferences that you would like to share. April?
Yeah, okay. So for 2022, I think I've mentioned it already earlier on. Yes, we do see a lot of risk. There are a lot of volatility. But that said, we are recommending a buy on dip. We feel buy on dips because we feel that valuations are quite attractive. And as I think JM had mentioned, that wealth is built during bear markets, and if you wait for all the concerns to be addressed and for everything to look perfect, we're not going to see the market at the 7.4 level. We'll probably be at 8.4 to 9,000 already. So to mitigate that risk, I think what you should do is at least control your size and just invest the right amount of money. And I think over the longer term, you will make a lot of money by buying stocks, because we feel that at this point in time, the negatives are priced in because the valuations are very cheap. There is a lack of confidence and a lot of concerns being priced in by the market.
April, in your closing remarks, you're still cash heavy. When are you going to be deploying that cash into the stock market? When do you advise to jump in?
When is
JM,
that
yeah.
for me?
Oh,
No, for JM,
no
yeah.
problem.
You mentioned you're,
Well,
you're still in cash eh. Oo.
well, currently I'm still waiting for what's happening with the Russian and how would the US and UK react to what Russian did in the Ukraine border. But of course, as I've said a while ago, I'm still currently have a not a short position, but a small position in the market, so that I won't be able, or so that I would be able to catch if ever there's a movement. And yeah, I'm just waiting for the right time or right signal. Probably when on the next dip of the market. But right now, I'm still cautious because the news is still fresh, and there's a lot of things that can happen, especially basically a lot of factors can happen, especially we're in an upcoming election, um, a threat of war, and so on. So yeah. I advise everyone to stay cautious, but always give yourself a chance to buy a small amount of fund on the stocks that you see um, that can give you a positive profit.
Okay, so don't catch the falling knives, but same as Miss April, buy on the dip and might be imminent as well. Angelo,
Yeah, so we are constructive. No, we are cautiously optimistic. We like cyclical plays. We like financials. We like consumer, in part because of the election spending, and also we still like telecoms because of the defensive nature of it. And we think that power, we initially liked that last December, but now it seems it has gone up a bit. And we think that we have to remain investable. Uh, the economic growth is going to accelerate. But of course, we have to also be more aware and carefully assess the growing headwinds since there are now a lot. I think this year versus last year, but that's just for the short term. Medium to long term, we still like the fundamentals of the Philippine economy and also the corporates, and therefore that's why we said remain investable.
okay, great way to end the session. Thank you so much for those insights. I really, you know what I really appreciate is that you have differing views, diba? And the audience can actually take those views and make decisions for themselves instead of everyone having one cautiously optimistic or diba? Or everything is great. I think we're a little bit in between all of those. So thank you so much. That was, of course, April Litan, Angelo Taninco, and John Michael Lapina. It's been such a pleasure having you guys on today's session. And we are, of course, very grateful to Meralco and Security Bank for making this discussion possible. Thank you as well to First Gen and Udena Corporation for supporting this online forum. I would like to also thank, on behalf of Business World, our supporting organizations. We've got the British Chamber of Commerce of the Philippines, the Management Association of the Philippines, the Philippine Chamber of Commerce and Industry, and of course, our media partner, the Philippine Star. Thank you very much. And to every one of you guys watching this session, please follow Business World Online for any updates on more projects like this. We hope you had fun. I had a very, very nice time squeezing out those insights from them. So once again, this is Danny Laurel, and this has been Business World Insights. Stay safe, stay healthy, and have a good afternoon.